What is up, guys? It is Sam here from Market Movers, and today I just wanted to touch on what has been going on in the market over the last 2 weeks or so. So last week we had an amazing rally. We had the markets up around 8% in the US, which is absolutely crazy, and people thought, oh, potentially this is the bottoming out, but it looks like it is probably going to be a bit of a bear market rally as we've come back down to earth again this week. So guys, I was going to get into touch on what's happened over the last few weeks and just have my own comments on how I'm dealing with this situation, how I am approaching this, how I'm now playing myself in the markets as well. So guys, without further ado, I'll get straight into the video and see you there. So guys, like as I said, I just basically want to touch on kind of what has been happening in the last week or so. I picked up some stocks that I look at, some that I own, and also just some of the assets that have basically been moving around massively in the last couple of weeks or so, and how I'm now going to be playing the market over the next few weeks as it is getting extremely volatile. It is looking extremely more like a bear case scenario, and the markets probably do have further to go down than where they are right now. It's impossible to call the bottom, and anyone that tells you that they think it is at the bottom or this is it or we're going up to this level now, they're completely wrong. They don't know when it's going to bottom. They're basically just make this stuff up as they go. So I'm just going to have a look to see what has been happening, and let's have a quick look at stuff. So the first one I wanted to look at here is Google. So Google over the last 5 days has had like a bit of a rally. So last week it bottomed out 2,120 and around that, and went all the way up to basically 2,371. So I had a good rally last week, but we've kind of been brought back down to earth again this week. But Google is a stock that I'm looking at massively. It's a great company. The ratios, the PE ratios, the growth estimates are all coming more and more. They look very good now. You're more likely to buy into this, but the reason I don't have it as an individual stock is because you are exposed to it a lot if you are buying the S&P 500 ETFs. So you are exposed to Google that way, but that would be my number one pick out of all the big tech names, would be to go into Google. And we've had this massive rally last week, which brought the price up quite substantially, but I do fear that there is further to go with Google stock on the way down as well. So secondly, we do have Qualcomm. So Qualcomm is a stock that I absolutely love and got some great news yesterday. Basically, Apple were trying to use their own 5G chips, but they actually have hit a bit of a snag in the road there. It's not probably going to work out for them. So they're going to have to continue to use Qualcomm's chips, which basically ignited like a small rally yesterday from to 126 to basically just over 135 or so. But we had a great rally last week. We bottomed out here like between 118 and went all the way up to 134 in the last week or so. But I fear, there could be more downside, but Qualcomm is extremely cheap biometrics and they have great growth opportunities ahead of them. So it's definitely one you should be having a look at. And here we have Crowdstrike as well. It's one that I do watch quite a lot. I have got one of my number one position that I do have. I've been buying it for quite a while, so I'm still actually in the positive on this one, considering a lot of the other ones have gone down. But it 156 and went all the way up to 180, which is it's a pretty big move. 185 even, sorry, it was a pretty big move in the space of a couple of days. And then of course you have the cryptocurrencies. So cryptocurrencies, they're not getting much love at the moment. So Ethereum went all the way down into the 800s. It's now back over 1,000, which is not too bad. But from where it was, it's just non-existent. So Ethereum was over 4,000 at one point, and now we're down at just around 1,000 mark. So Ethereum, it's the way that I'm kind of looking at these cryptocurrencies. I put in a very small amount every single day just to average into them as a speculative asset. If I lose it, I lose it. Obviously you don't want to lose it, but I think it's worth having some money in it as a speculative asset. But what I do stick to is generally just Ethereum and Bitcoin. and just kind of maybe small amounts on like XRP and Cardano and Polkadot. They're kind of the ones I do look at, but Ethereum mainly, I'm just got dollar cost averaging into that every day, just putting in a small amount every day away into Ethereum, and we'll just see kind of where it does kind of average out on. But look, I wouldn't advise anyone who doesn't like to lose money or is not willing to lose the money that they put into it, do not go near the cryptocurrencies at the moment, especially as we're coming into some massive economic headwinds. But as well, like on the markets, the best way to play it is just buying the general ETFs. So you're buying an ETF that basically mirrors the S&P 500 performance. It's down 20%. It's probably got further to fall, but if you're averaging in and you're buying all the way down, and then you're buying on all the way up, you're going to get a very, very good average, and it's the easiest way and stress-free way to invest. And especially at the moment where things are getting crushed and you're not understanding where the economy is going to go over the next few years, the ETFs are definitely the way to invest, to try to protect your money, to try to invest stress-free, and just come back to it in a few years and then see what the fruits are of what's happened with your investment. Like, so investing in these is definitely the best options, especially for us in the UK and Ireland. The one that we would have to be buying is the Vanguard S&P 500 ETF on the London Stock Exchange. So I'm just dollar cost averaging into this. I'm also choosing the emerging markets. I'm also putting money into Berkshire Hathaway and also into a whole world market index fund, and just dollar cost averaging every day, just putting a small amount of money into all of these ETFs, and then also into Ethereum, it's a small amount, and then I'm also going to play just depending on how much cash I kind of have on hand or the price. I'm looking at the individual stocks I do have, and I'm kind of just dollar cost averaging into some of them as well, but particularly looking at Qualcomm to try to build a bigger position in that one. So guys, look, I hope you kind of enjoyed this, got a bit of understanding what's been going on in the market, where I kind of think that this is going to be going over the next few months. I do think it's going to probably continue to trend lower, but I could be wrong, and we could rally up from here and not see these levels, but I don't think it's likely. And I think just dollar cost averaging into these assets is definitely the best way to play these markets at the moment. Thanks guys, and I hope you hit the like button, hit the subscribe button. It helps us out an awful lot, and hopefully you enjoyed this and learned something from it as well. So I will see you in the next one. Bye bye.